Good hunting, Blake. Hello, Michele. Welcome back.
Hello,
I
can you
know
hear me?
I can hear you, and if you could share your screen, I know you're on a tight schedule,
Okay. I'm
and
just
I'm not going to interrupt you as much as usual because I want to hear all the pearls you have for us today. So
all right. First of all, I'm gonna start the video. Okay.
the
All right.
video is for your
Oh,
is the camera. You want us you do the
yeah, I'm gonna
share
share.
screen.
Yeah, got it.
All right. So Michele is being interviewed everywhere. She's on Fox News. They interview her in China. She has an interview right after this on CoinDesk. So there's a reason why people invite Michele to, their whatever their format is because of her insights into the market. So take it away, my trading warrior sister.
Hey, Dale. Thank you. Thank you for
Uh,
that lovely introduction.
uh, yeah, okay, you're very well deserved, not patronizing. It's just the truth. Go ahead.
All right. Well, I hope I can live up to it.
Is
Because,
it what are we looking at? The dysfunctional family here?
well, actually, if you're looking at the family here, they look rather functional, don't they?
Yeah, yeah,
So, this is a market that's very skittish, obviously, because of this new fear of the rising yields and
yeah.
what Powell's going to do or is not powerful to do. And then what's going to happen to the market as a result. And that's why I think that you're seeing the modern family very strong because they're functioning more on a factor of optimism for the economy coming back and coming back really strong. That's why the family is the family, because the
Yeah.
family really represents the inside of the economy. The only one that
Okay.
there's two members that have been relatively struggling. And when I say relatively, they're still in strong bullish phases, and that would be semiconductors and biotechnology. So what you're seeing here is retail, which is somewhat influenced, by the way, by GameStop. So that's not really giving us as a fresher read as we would have liked on just pure brick and mortar. But
Okay.
nonetheless, you can see right here that it's really inside last week at the upper end at this point. Doesn't really get dicey unless it starts to break down under last week's low, which I can barely see here against this black screen. Let me
It's like
see.
76.80 about there,
Yeah,
Michele.
76.80. So right now we're trading at 91.55 and XRT looks
Yeah.
like it's coming in. Well, right now it's trading at around 91.
Okay.
So there's that. But, it has room, like you just said, all the way down there before we start to get nervous about it. Here's IYT, which we know went and made a new high on Monday and now is sitting back in the range of last week. But again, doesn't really get dicey until it breaks about 217. Biotech actually started to come back a little bit after it had this big correction, but it doesn't really get interesting until it takes out 160. And if we break down under 150, then I would say, okay, that looks pretty ominous. These 50-day moving averages here coming in could be the key support. And even
Any reason why biotech would be under more pressure than the other groups with interest rate pressures? Especially in this age of vaccines, why um, biotech looks to be probably the weakest chart you have up there.
right. Well, I think a lot of it has to do with the fact that all of the news about the vaccines were sort of in the market. Yesterday,
Okay.
Moderna actually went up. But these
Okay.
companies like Johnson and Johnson and Pfizer and even Moderna, even though it had a bit of a pop yesterday, that's like yesterday's news. So then you have these incredible fluctuations among some of the other drug companies. Successful trial for something, and you see a particular drug company go up 70%, let's say overnight, and
Are you,
vice versa. Go ahead.
Michele, are you going to get the vaccine? Are you going to accept the vaccine?
I'm on the waiting list. New Mexico has given out a lot, but Keith and I are both on the waiting list, and we haven't heard
Okay.
anything yet. But yes, I will, for the very simple reason is I want to travel. I
Okay.
want
Yeah,
to
a
at
lot
least
of
get to
people
the.
feel that way.
That's the
We're
only reason.
okay.
Yeah.
All right. Okay. Because I mean, we're not there yet, but you think it's going to probably go that way to get on an airplane, especially internationally. You'll need like a vaccine passport, right?
Exactly. And international is not even what I'm thinking about. I just like to get to New York to see my mother, who I haven't seen in a really long time.
Oh gosh, okay. I hope they move you up on the list, and I'm going to call New Mexico after the close today. All right, Michele.
So getting
Go
back
ahead.
here, so just really, if we just without, I mean, the semiconductors also have struggled. So interesting about the semiconductors because there is actually a legitimate chip shortage from Taiwan because of environmental conditions, drought, like they haven't seen in decades, since they are the major makers of chips. That's part of the drought situation. There's been some
Why would a
hoarding.
drought cause a shortage? What's the
They use water.
input?
They use water.
Oh, okay.
Yeah, they use
All
water to
right.
actually make the
Interesting.
chips. And what's also interesting is that New Mexico and Arizona in the United States are two states that are high up in terms of chip makers, and they're two of the least water states around. So I thought that was kind of bizarre. Little
Yeah, I mean,
statistic.
it's such a turnaround from, the normal narrative in chips is that it's been commoditized and there's billions of them. And boy, have things changed in a year, you
Right.
know.
But now what happens is you have innovative technology that other companies are trying to come out with as a result. Like, for example, NVIDIA is trying to create chips through other types of mining, cryptocurrency mining,
Oh,
for its
okay.
gaming part of its business. So there'll be companies who will try to work around, but right now this is something to keep an eye on, although we're not seeing it really in terms of new highs. It's not going parabolic or anything, but it's certainly something to be aware of. And of course, it may not even be bullish for the companies ultimately, because if they have to raise prices because of a shortage. So that's something else to be looking out. Like, for example, people have said to me, oh, with all this food inflation, is it a good time to buy General Mills? And no, not really. I mean, General Mills as a stock has done okay because of the overall market, but if food prices have to go up and
There
it
goes their
creates
margin.
exactly. So it's always something to be aware of.
I know
Transportation.
you're on a tight schedule, and I want to acknowledge it. You're one of the first guests that came in, a couple of years ago talking about commodity inflation featuring sugar. Before anyone, before the big move in silver and everything, you were bullish commodities. We've had a tremendous run, and I just want to validate that you were one of the first ones to come in and were ahead of the curve about commodity inflation, bull markets happening there. Do you want to give us an update on those
Sure,
before
let's
you
take a
go?
look. Absolutely. Well, I just want to mention something here about transportation
Okay.
and banks, because
Okay.
you can see transportation went on so far early in the week to make a new high, and now obviously has come off with the rest of the market. But if you want to understand what's happening here, people cannot be calling a top at these levels. The only thing that's really looking ominous, of course, all is tied to the rates and the junk bonds, which right now have broken down. Let's show you what that looks like, because this is really what helped me determine that the market was going to crash last year before the COVID news really hit the market, was that these junk bonds, which had been what I call the Fed playground, were actually starting to sell off along with the high corporate grade bonds before the market did. And now you can see this is starting to get hit again a little bit,
Yeah.
but on a longer term chart, we're here above the 200-week moving average. It never was able to clear, this is the monthly chart, was never
Right.
able to clear the 80 months. So we haven't had any major reversal in terms of a long-term reversal of trend. But on
Wow.
a shorter term, on a 50-week, excuse me, a 200-week moving average, we're still doing okay. So this is what I would watch here. While the market is still holding up near highs, if this holds up, if the bond buying program comes in strong, then I would say that right now the market still looks really healthy. If this
Yes.
breaks down, and I like to
Yeah.
really bring it down to one instrument because it makes it so much more sensical, is
Yeah.
that if this
Yeah.
breaks down, I think it would be really hard to support these high prices that we've
Like
seen here.
under 107 for that junk. What's the symbol?
Exactly.
JNK? Okay.
JNK 107. Yeah,
All
really
right.
107.
Maybe you could answer this question, Michele. And I know that, now I know because you've showed me, but treasuries led the way down, right? And you and I were trained that treasuries compared to corporate and junk were the flight to quality. So can you explain why the quality has been the one bond market that has taken out the COVID low, the April low, the 30-year and 10-year have done that, while these are just starting to roll over. Why the extreme weakness in treasuries compared to junk and corporate?
Because of the yields. Well, you're talking about like the high grade bonds, or you're talking about the actual interest
I'm
rates?
talking about treasuries, like the 30-year bond and
Oh, they're like the TLTs?
yeah, I mean, they took
Well,
out
this is because
April
of the,
lows.
yeah, because of inflation fears. This is
Okay,
all reflecting the inflation fears right here. And
okay,
which is so funny in a sense. It's so funny to me because you know, as you just mentioned, I've been
yeah,
talking about the potential for inflation for over a year now, since really I started December 2019, focused on the sugar market in particular,
yeah.
but not just the sugar market. I said this was going to be a food-driven inflationary environment. And what's so interesting is that of all of the different areas that the Fed looks at to measure inflation, food is an exclusion. So now all of a sudden people are catching on because of other things like industrial metals, but really oil is one of the bigger factors that they look at in terms of inflation numbers. And oil has gone up, but certainly not to any inflationary indicators. So right now, the inflation anticipation that I had was a reality, but with these yields coming off so much, that's now saying, well, gee, what is going to really make this inflation go out of control? And right now we have the dollar has bounced a little bit.
Hmm.
Obviously, you can see the yields here are something that has bounced a little bit. The junk bonds, that's why I like to show it, because that's where people will go. They'll buy the high risk companies because they pay the most yields, are also struggling here.
They
So
never learned the higher the yield, the higher the risk, did they?
exactly. So when you look at the TLTs and it's coming in even lower, you can see it's coming in at 135.09, which takes out
Yeah,
this low right here. So we're
right.
getting another gap lower here. Take a look at this. You want to talk about a trend.
Yeah,
This is the 200-week moving average, which
right.
comes in,
Right
again, we're going
there.
to gap under this today.
Oh, okay.
Okay, and then also here is the 80-month moving average, which the yields have been, strong for a long time, but they took out the 80-month moving average after a brief dip below with all the Fed talk about raising rates in 2018. Remember that?
Yep.
Since then, they've been over this 80-month, and now here is 131.99. So if we break down, this is what I would be looking at around 132 as the next level of potential support. But let's take a look at these food commodities while we have some time
So,
here.
I was thinking before you said that, I know you only have 5 minutes, but, when you were talking about these things, it was contrarian, right? A bottom in commodities. Everyone was still talking about deflation back then. And now it's been fully embraced, the reflation trade, everything. So perhaps now with what's happening with maybe the dollar and rates, we get a breather, which is going to create great buying opportunities in these commodities. What do you think?
I think that, yes, I would certainly, there's a couple of factors for food to watch because it's not just about the dollar and it's not just about the yields.
Yeah,
It's also
weather.
about the weather, as
Yeah,
we know. And so when you're taking a look at sugar right here, sugar is somewhat tied to oil as well, but sugar started making a move higher long before oil did. You can see that
yeah,
we started buying sugar here, we got out, obviously, and we've been long now sugar really pretty much since November. Well, it started in July. We added more in November. And now we've already taken some profits. But if you look at this trend here, this is why I love these 80-month moving averages. So I saw the move up to the 80-month moving average. But as much as I have been bullish on the inflation theory, I have to say we've run into some pretty serious resistance here. So
yeah.
while everybody's running for the exits thinking that there's going to be inflation, I'm thinking now that the anticipation of inflation may have been greater than the actual event of real inflation, unless I start to see these prices breaking out here, because that'll tell me sugar as my lead indicator for inflation long before anything else will tell me, maybe not so much. But if we take a look at corn, corn right now is
Yeah,
still holding very strong. This is all weather related.
right.
Argentina,
Yeah,
Brazil, and even in the United States. If we take a look at soybeans, and I'm looking at this through the ETFs, by the way, not the futures.
right.
Also holding up really strong, really strong. This broke out over the 80 months. So soybeans had been underneath the 80-month moving average, which takes you about 6 years back. So it's a business cycle for years, since like 2012. That's a huge reversal. So this food related inflation is what I'm still keeping an eye on, unless, of course, environmental conditions change. But there's been food hoarding, there's been supply chain disruption, there's been environmental conditions with drought. And then on top of that, you have the situation here where in the United States, there's been some weather problems too, and we're not even in the drought period yet for the United States. So
La
this is
Nina.
something. Yeah. So if you look at gold, of course, you say what inflation? But although gold is now looks like maybe it's bottom, we actually are long a little bit of GDX. Off of, we actually got in
32.
down here because the risk was so tight. We've already taken a little bit of profit, and we've bought some silver, which we've been in and out of for quite some time. We just got back into it at a little bit higher level, not much. We're long at 24.30. It's trading, it's coming in 24.10 and 11. But this too, we're really keeping an eye on here to hold up. If the metals start to move up, then maybe I would be more convinced about the inflation theory than just the food. And also, like I said, if we get back to the TLTs, this fear of inflation that's showing up in the yields is interesting, because I cannot wait to see what Powell does today. He may have nothing to say about Operation Twist, but that would be a real sigh of a relief for the market here right now.
Yeah,
so
Chubby Checker is going to be with him on stage.
Exactly.
I knew you'd remember. Anyway, you know, I know you're running on a tight schedule. I want people to know, besides how to follow you on Twitter at Market Minute, how they can get to your website and follow your great work, Michele.
Well, thank you. Market Gauge is our website. We do write a blog every day called Mish's Market Minute Daily, which is posted on Twitter at Market Minute. Market Gauge is the website. I don't know if I said Market Minute or not. It's still early.
You said Market
Gauge. I said Market Gauge. Okay, good.
Yeah.
At Market Minute on Twitter, and I'm on Instagram. I do morning stories on Instagram where I talk a little bit about the market, and I often give a tip, a trade, which so far has worked out really well. So if you can go to Instagram as well, and that's Michele Schneider there.
Okay. My Trading Warrior sister, and I kept you on schedule. And,
yes, thank you.
And I really appreciate you being here. I'll get a hold of you to set up the next cycle. Good hunting, Michele. And I hope you get your vaccine and you're able to embrace your mom. Again, I know, you know, that's really the toughest part of this whole thing, because, you know, love always wins, Michele. It's not about money. Love always wins. So
absolutely.
Thank you so much for giving us some of your time and your interesting views on the markets today, my friend.
Thank you, Dale, very, very much.
Okay. Thank you, Michele. Everyone, that's it. That's a wrap for us today. Good hunting. We'll see everyone tomorrow. Remember, don't just count your commodities, your bushels, your bonds, count your blessings, and that'll be a wrap. Thank you. You're very welcome, Brock. People are thanking you, Michele. Adios.
Thank you.
Yeah, adios, everyone.